Alright. Again, starting the market. Oh my god, they hit this 78.
DYN.
200.
RENT.
RENT.
You know, I have the mic too close to my face. I don't want that shit to sound weird.
ECTS.
Like, you see, I'm focusing, but this stock is kind of dog water. Right? It rejected from 0.83. This stock hold the. Is it this? No, I think it's a different one. Yeah, it doesn't seem strong enough. That sucks. There might be no trades today. I'm gonna keep it a stat. Might not be no trades today.
UTI. NIT. NMH.
Oh yeah, this shit looks terrible. 92. Almost $1. That's actually insane. It's rejecting from this level right here. 90, 80, 30 cents for it. This one high value 100.
RENT will resume at 12 hours 21 minutes and 6 seconds.
Or yeah. Ugh. Brent. They hold? What's it on holding? All 21? Alright. Well, we like trading holds, but we gotta be careful. Alright, rent is definitely important right now. Rent as the center of the stock, not actually rent. What is it? 1221? Yeah, 1221.26. Bro, I had like 2 minutes to put my contact lens. I gotta put them on because I can't see for shit. That's gonna be important to see. Alright, there you go.
RENT may resume in less than a minute.
Oh, I gotta do the math. Where's my phone? Phone. Ah.
MSPM.
Where's my? Where's volume? 15? That's such a low volume for this type of stock. And no one's looking at it. That's long. Went from 71 to 84.
RENT.
There's a lot of volume coming in. Yeah, rent just pulled up. $32.72. Just right below on there. I don't know. I mean, fuck, if it comes back up. I mean, it has to hit 160, but it has to come 60 for like high as volume. I mean, it gapped up to 70, 80. Oh shit, did pass it. But with higher volume, doesn't look like it. Oh, hell no, she did not look good. We need high volume, bro. That shit not bad. I mean, there's people looking at it. This volume's picking up on. The spread is kind of. Dude, the spread is huge. We need the spread to catch up. It's a 30-40. Oh, they were popped up. Oh shit, it's going for the break of high, but rejecting for the 110.
Hard NT.
Oh, the team broke. If we finish below 178, that could be a bad pullback. Oh shit.
MSGM.
Wait, what the fuck? Why bought me 250 shares though?
MSGM.
MSGM.
I'm 71, bro. It's probably like 20 cents. Remember, I wanted to buy like at 160. 160, I think. I think I lost like 20 cents right there.
MSGM.
Let's see. Okay, I lost even less. Let's go. But still, I still lost some bread, bro. It halted, but went against us so quickly. It literally went, bro. It was the top. It was a gapper. So, I mean, not a gapper. It was a stock that was in the new highs. You know, I ended going 55. I probably would have lost nothing, but still, bro, like, being in that position is very weird. You don't want to, like, you don't want to make those mistakes and stay longer there and then actually start fucking up. But it got me at 250, which is kind of weird.
LASE.
I mean, rejected at, it went up to 875, which is honestly pretty cool, but didn't do no pullback. That's the only thing I didn't appreciate. You know what I'm saying? I wanted a pullback, and I guess the only resistance was they rejected. It went from 338. It's like almost $1 up, but like, you have to keep in mind, bro, that's like not an opportunity that I'm really used to. Like, it was really low on volume, and it barely started picking up, like, just now. Like, it just barely started picking up. But I don't like it. It made me purchase 250 shares. Like, give me the lowest. Give me the lowest of this 50s. I think it slowed down. Obviously, it's gonna be in this range, probably right here. Yeah, everyone's not giving a fuck about it.
PM.
26, 24, 10 cents. I mean, yeah, I mean, that's pretty good, I guess. But I think I'm done for the day. I mean, there's nothing really like. I mean, Rent is showing up again, but like, come on, let's be honest. That shit was a flop. That shit was a flop. It halted, so a lot of people were interested. I was interested. I'm like, this whole team, bro, cool. It went higher, surprisingly. I was expecting like a rejection and then a bounce back up to newer highs, like I've seen previous. What the hell? This shit broke. This is a good pattern right here. 271. But like I said, it's not really like good. I can't even break this. Ryan just went terribly. It's almost still on the charts. B S G M. Oh my god. B S G M. Wait, is this on? Oh my, you're telling me you guys can hear the audio the whole time? That's me, guys. That is so me. I forgot I had this on, bro. If you can hear the fucking wave shit, that's me. Get mad at me, because I fucking should have known to take that bitch off. BSMG, I mean, it is moving. See, and then fucking this. Do a lot of stocks show up a lot of times back to back, what I'm noticing, bro. Oh my gosh. Everything is so bearish. Fuck. Yeah, that was S. Oh, B S. Okay, car is moving crazy. It looked like a gap. Holy shit. Okay, but it's kind of choppy. I mean, it's a straight fucking line from 1086 to 114. Cool, but what's it trying to accomplish? Like, you're really choppy right here. Let's keep it a stack. We're really choppy right here. And then want to go as high as Holt. Nope. That would have cool. I would have got in, see what's going on in the Holt. Holy shit. I'll have to go back on this one. Yeah, man. What the fuck? MNDR. I don't know what this stock is, bro. Like, I never had a history, so that's why maybe a lot of people are interested in it. Hold on, bro. I'm telling you, bro, what stock is this, gang? Everyone say MRD. Yeah, it has 3.9 million. No float because I guess it's a new fucking stock that no one has heard of. Like MRD, like what we're looking for, our next hole up, bro. I'm gonna keep it a stack. Yeah, Rand's dead. I'm gonna see. So, oh, stock that went on a hold. Holy shit. I kept buying both of these, but holy moly donut shop. Holy moly donut shop. Yo! What the fuck is going on? How much volume with this was? 163? Bro, everyone's gonna be looking at this now. I mean, everyone should be looking at this. That's actually insane. I don't even know if I can afford that like that, bro. God damn, bro. Yeah, I'll do that. I'll do that. What? Let me see if I got. It's going up there. I mean, it did went up. I mean, it went up a lot. 41.73 to 45.44. That's a huge fucking gap, bro. It looks like it's slowing down. Oh yeah, look at that. If you look at 5, boom, boom. Yeah. I know I love trading halts, but some of these are kind of weird. They're playing very strange. This one, SO2, what the fuck? Like, what? Yeah, this one, none of these can trade, bro. I look at the halt level. There was a halt. I obviously was trying to take the opportunity if I could have. There's an opera called CCC, so that one, I don't even know. I saw that before, bro. I don't know. Yeah, they're doing that. They're dead, bro. Dog shit. Only it's BSGM. There's an orange stock that is top and it looks fucking. Fuck. I'm so tired. There's a lot of stocks that showed up out of nowhere. Like BMR. I wonder that what I remember that stock was going crazy. BMR. Oh, what the fuck? It was going up slowly. From 716. Hold on, that's not bad at all. Actually, it went as low as 692. Holy shit. And then it just slowly climbed up for today. That's not bad. Wave? Do I still have wave? Nah. PV. Doesn't look like a good chart. Wave? What the fuck is wave up to? It as CB. I don't know. Probably have to wait for tomorrow and keep it a stack. Yeah, bro. We wasted our goddamn time. This shit is trying to see it is ticking at 221. Can't break it. Ooh, 114. 6 cents, 6 7 cents. That's pretty good, but I don't like it the way it's moving crazy up and down. Oh shit! No! Don't you fucking dare, bro. Alright, that's pretty much it. I'm gonna close the tab. Oh, it passed it, but it's gonna reject fast, and plus it's not a clean chart. I thought 11 we can go crazy, but I think I'll have to start waking up again early. Yo, look at that shit. Yo, that's what I'm saying, bro. Oh, I have to start waking up early again at 8:30. I only want to try this, but I don't know, man. It's just the same problem. I think opportunity to see about the bro said he took a nibble on a APN on the pullback. What are you looking at, bro? APL is crazy. Is he monitor that one? Let's see. Excuse me. Oh, ALP. I want that one crazy. I'm surprised it didn't pick up the volume it was supposed to. I need candlesticks, bro. Candlesticks, please. Yeah, it went all the way to 40 fucking 5. I can't with this stock. It's crazy, bro. Getting into the stock is weird. Alright, probably guys don't know what I'm doing, but we're gonna go back to our live stream. We're gonna watch more of our mentor teaching us, because you know what? I liked it doing yesterday, and we're gonna keep that in a schedule for now. I think it's a great way to keep us keep studying, especially at this bear market. I haven't really learned that much, and I'm not really taking it serious. I am waking up later around 11 p.m. But to be honest, it's not that high volatility as the beginning. I think that's what I want to look for. I want to look for high volatility in the market in the beginning. So that's what we're gonna do. Where's our watch later? Right here. So obviously that's what we want to see, and that's what we continue to want to watch. I think it's right here. I think we left off him talking about himself a little bit, and I feel like that's great for all of us to learn a little bit more about bro. Okay. Alright, I think he was about to go to the pattern she's looking for. We're gonna go a little bit back so we can just refresh our memory. We do have to punt this. I'm gonna punt my loss today, which isn't that big. I'm actually pretty glad it wasn't, because I was fucking like, yeah, my heart was going crazy. Today is Wednesday. I'll see, let's set it up. I want to set it up right now. Need to stretch. Turn this off. Turn this off because it's extra work from a monitor, especially if you don't need to. Yeah, also yesterday's stream was funny because it ended randomly. It's because I accidentally touch my power cable in the back of my PC, and it turned off. So yeah, that just was unfortunate. But either we're gonna continue again for today, man. Watch maybe another 30 minutes and stuff just to keep ourselves going and watching, learning. I'm gonna set everything up again, making sure we're ready to another learning session. Dude, that's how I don't like, bro. I put shit everywhere and I end up costing me where the things are. Okay, good thing I left it there. It's not that could be really bad if I left it somewhere else. Oh my gosh. This has to be over here for right now so it doesn't fall. Oh shit, didn't meant to hit that. My bad. Alright. Put this up. Get ready to trade. And stuff. Get that in my privilege look. Headphones. Oh, it's like a whole process. I'm telling y'all, man, I gotta make sure I'm comfortable. I gotta make sure everything's set well so I can start learning. I know I'm hitting the books. Okay, not really a book, but I'm hitting back the books. I'm hitting back the books, learning more about trading and stuff. Cause there's a lot of things that are not working because we're in a bear market right now, and a lot of my strategy isn't working. So I have to figure out either I don't know if a new strategy, or I have to figure out like what do I do in a bear market? Like, do I just wait until it comes back to a green market, or find a new strategy and stuff. So I forgot how this to mute. We could
with the first pullback on the bull. And then we can do a brief discussion of micro pullback, and then we can do a little bit of ABCD. Because ABCD pattern is basically you have the first pullback, it then fails, and then it continues. That's sort of the way it works. So now let's go ahead and jump in here. Wait 1 second. First, I want you to promise me that you won't throw hard-earned money into the market before you have first proven that you can make money by trading in a simulator. All right, so this was the one I was. So look at what happens to this guy's head. Now, I want you to think about this. This is what it's like when you trade with real money. When you trade with real money, before, what do you think is going to happen to his head and his brain area? Whoa. Close call. Okay. Well, let's not risk it, right? When you trade with real money and you don't know what you're doing, you are setting yourself up for failure. Seriously. You don't have to do it that way. So many people do it that way, and you don't have to do it that way. So I have to ask you guys a really simple question, which is, how bad do you want this? Because if you really want this, you will be patient and you will be disciplined. If you get desperate, you say, I need to make this money next week. I need to make this money by the end of the month. You will lose. I guarantee you.
that shit.
So if you really want this, be patient, be disciplined, pay your dues. And in a bear market, this is the best time to be learning. Because if you can make money in a bear market, you are setting a really strong foundation for when the market heats up. And when the market does start to heat up, you are ready to put the pedal to the metal and scale into it. Now, if you start learning when the market's hot, you're missing out on that opportunity because you're not going to be able to fully capitalize on it because you're new. So you are starting, you are learning right now at the perfect time.
No, that's facts.
Okay.
That's what happened to me, bro.
So I want to talk about risk management. Let's lay the foundation here for trading in a bear market by talking about risk management. Trading is risky, all right? We understand that, but let's think about how this works. So this is a table, as you can see right here, and it's comparing risk and reward. And so if you risk $1 to make $1, you have to be right 50% of the time to break even, all right? That's your break even point. Now, if you risk $1 to make $2, you actually only have to be right 33% of the time in order to break even. That means you can be wrong 70% of the time, 65% of the time, whatever, and you can still make money. That's incredible. That's because you understand statistics. Now, what a lot of beginner traders do, and you might be able to relate to this, is they hold losers too long and they sell winners too soon.
Yeah.
If that is something you do, you hold your losers too long and you sell your winners too soon, I can guarantee you, you will have a negative profit-loss ratio. You win $1 on average, but you lose $3. If that's the case, you would need to be right 75% of the time in order to be profitable. Now, if you look back at the metrics that I showed you earlier on the over 10 million in gross profit, you would notice my accuracy is 69%. 69%, that's great. That doesn't tell the whole story. You can have 69% accuracy and still lose money if you have a negative profit-loss ratio. Or you can be right 69% and make $10 million. Right? So it's how do these numbers come together? And this is what being cognizant of risk management allows you to empower yourself to be successful and make money, even if you're not right 100% of the time. All right. So, and here you go. I have this slide here again. So 69% accuracy right there. You can see my average winners and average losers are approximately the same. They're roughly the same. They could be a little bit closer, but they're pretty close. And Casey says, me too, I sell to quit. Listen, it's a fear-based habit. It's a behavior driven by fear. It's the fear of losing the small gain that causes you to cut it and sell it and take the profit. And inversely, when you're in a loser, you don't want to have a loss. And the only way that it maybe won't turn into a loss is if you hold it and then it goes back up. So you keep holding it, hoping it goes back up, because it's not really a loss until you press the sell button. There's always hope until you press the sell button, so you keep holding. The sort of our human emotions are not designed to trade the market, right? The market, humans have been around a lot longer than the stock market. We have to adapt our mind to trade the stock market successfully, because the way we are naturally wired will cause you to lose money. So this is about, it's not, and so Marwin says it's about controlling emotions. That's one way to put it. But on the other hand, I would say that it's difficult to control your emotions. You can't just not be angry. You can't just not be frustrated. You'll feel that. It's developing awareness that I'm feeling pissed off right now. That means this is a good time for me to walk away and stop trading. That's what it's about. That's the best you can do. You will still get emotions. I still get them. I still get angry. I still get excited. I still have all the emotions. But what I've gotten better at is learning to recognize their influence in the way I trade. That way I can cut off real quick and get out when I'm starting to feel myself getting what I call emotionally activated. All right. So I kind of laid out profitability in terms of 3 core components, which I'll just share with you briefly here. The 3 core components are consistency, profit-loss ratio, and accuracy. Your profit-loss ratio, I just talked about, is your average winners versus losers, and your accuracy is your percentage of success over, X number of trades, how many were winners. The third was consistency. Now, sometimes traders say, Ross, which one should I focus on? And so I'm going to take this as an opportunity to get up the whiteboard here. This is kind of, there's different ways to approach it, but this is what I would focus on. Focus on A quality, A++, AAA setups, the best setups. Focus on trading the very best setup. Goes up. And you know what happens when accuracy goes up? You have fewer losers. So you know what improves? Your profit-loss ratio, because your losses are smaller when they happen, because you're focusing on the right type of stocks. And you know what that then leads to? Consistency improves. Consistency goes up. So where do you need to start? Right here. And this is true whether you're in a bear market or a bull market. Focus on best quality setups. Now, that's a great question. Dennis says, which setups are best? Dennis, you are sending us right into the next section. I couldn't be more grateful. What a perfect transition. Can we get Dennis here every time I have a study? I created a process for finding the right stocks each morning. So, as I mentioned, the realization that I had years ago in my trading was that my profits were from stocks that were up 10%. Okay, so, well, up 10%, that's easy, right? So, just have to look for a stock that's up 10%. Boom, done.
I don't keep it a stack, bro. He's gonna go over the same thing.
An award-winning trading
and there's
outfit is
nothing
as
wrong.
easy to set up as your favorite playlist. Voted most popular
That's what I'm saying. Look, we watched the last one. We saw what he said. But let's keep it a stack, gang. Let's keep it a stack. You learn. I heard this so many times, bro. My brain is gonna melt. But yes, it's good to go over it. But I always see it. Like, even when I watch the new videos, I always see it. But if you guys do want to write it down, again, please do. Okay? Write this down. It is important. If you didn't see the last stream, write this down. This is the kind of stocks you want to see. Mostly, if you're like me that don't have a scanner, like that you buy monthly or something, you just use online. I did tell you guys to use this channel right here. I think it's great. Oh, shit. Oh, shit. There go, caps. Name is Zido. So search it up, or you can put Zido Scanner. Great person, honestly. He does everything for you, pretty much. Finds the top gainers of the market, and yeah, man, let's get ready to trade it. Obviously, eventually, I do want to. Eventually, where I feel like it's like I made trading, I guess, great, that I can start buying my own scanner and find the stocks that I want to trade. I'll do that. But yeah, write this down. My bad. My fucking brain is hurting a little bit. But it's a 5-time relative value, 5-time above average value today. So you want to see if a lot of people are in this. Relative value basically means how many people are in, like, people are trading this stock back. You know, like buying and selling. Already up 10% on the day. That's like how much it surge. You want to at least see 10%. There is a news event moving the stock higher. It's basically self-explanatory. I do need to get good at this, man. I do want to find a way to find news for a stock, so I can, see. Obviously, I'm gonna go to him and find one. I feel most day trades prefer $1.20. That's true. I prefer most $1.20. That's what that's pretty is. I noticed I feel like I do know. I don't know. I'm not gonna say anything because I don't really know. Supply less than 10 million shares available to trade. Okay, fair.
Number one, we need 5 times relative volume. Passed. Now it starts hitting high a day. It's into algo trading and being able to scalp algos. So what ends up happening is news comes out. News hits the PR. News hits the wire at 9 a.m. 9 a.m. news hits. Immediately, algo reads news and instantaneously initiates buy. They buy and they pull sell orders. So what does that do? All of a sudden, you have a level 2 like this. They start pulling the sell orders. They start hitting the bid. And now you've got an imbalance. The stock starts moving up fast. Now it starts hitting high a day Momo scanners. It starts hitting high a day Momo scanners as it's moving up. Boom, 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 boom. Now you have retail traders. They're jumping on, and this is now accelerating and moving faster. It starts with an algo spike, squeeze, and then we jump on and ride that momentum. It comes back to the news. But here's the thing. It's not helpful. We have a news feed that we use, a proprietary news feed that puts news headlines in our room. But the fact is, news is coming out all the time. Okay, so just listening to news, you could listen to news all day long. In fact, we need to use these scanners because we need to see something moving up. So the scanners are the radar. So I have a development team that I hire. These are coding people. They develop it. They built this scanner for me. We subscribe to market data. Okay, so what we want to do is we want to get market data basically at the same time that those high frequency trading algorithms are getting their market. So we all subscribe to market data, and there's this big competition about co-locating the servers. So you're getting market data at the same time as everyone else, right? There's even like having the same length of fiber connection. So everyone's getting the same sort of level playing field, but it's never really level. You guys, it's not. But we do everything we can as a retail trader to kind of get our edge. So we have a market data vendor. We get the market data, and then we process it in our own servers. And we are looking for stocks that are moving up quickly right now.
Type sheet.
And as a Warrior Pro All Access member, you guys have access to the same tool that I use. I've made it available to you guys. So, and that was one of the nice things, is being able to have a development team build this out for me and then share it. So we get this news, we get the stock squeezing up. We see it starting to move higher. And then immediately we see, okay, it's got a news headline. It's already up 10%. The stock is between 1 and 20, which is only important because those stocks can make bigger percentage moves. A $1 stock that goes to $5 is up 400 or 500%. A $50 stock that goes up to 55, it's up the same $5 a share, but it's only up 10%, right? So lower price moves in a percentage gainer sense faster, much more attractive for retail traders who are often trading with smaller accounts. And then we've got the supply side, less than 10 million shares available to trade. That's preferable. So when a company does an IPO, they sell a certain number of shares onto the market. Companies that sell fewer shares have a lower level of supply. So, Tesla is a really big company, but they haven't sold nearly as many shares as a company like Bank of America. Some companies out there sell a lot more shares to raise money, and others sell fewer. So companies that sell fewer shares, when people want them, boom, 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 it starts to move up more and more and more and more. There's just a limited level of demand. Now, at the end of the day, you still have the market cap equation, which is the number of shares and the price that it's trading. And by the way, if I'm getting a little over your head, have faith. This is all stuff that, first of all, we cover in a lot more detail for traders that are part of the curriculum. And there's a lot to learn here. So I don't want you to get overwhelmed. Just soak it up today. And if this stuff is interesting to you and you're like, I want to keep learning, then keep learning. It's like learning a new language. I mean, there's a lot here to learn. There's a lot to unpack. I try to make it pretty clear, but anyways. So, the fact is, at this point for me, finding stocks to trade is no longer a struggle. And that's really a big deal. So I find these stocks to trade every single day. So circling back to Dennis's question, how do you find, what is a quality setup? We're going to talk about the setups in just a second when we get into the actual curriculum from Warrior Pro. But in terms of the right type of stock to trade, I'll just have it on the back of this so we can refer back to it. We're looking for 10% at least, price between 2 and 20, 1 and 20, relative volume 5 and higher, news catalyst, float under 20 million, 10 million is preferable. Okay, so this is the general criteria. If a stock right now doesn't meet this, I'm probably not going to trade. Okay, now, it might meet like 3 of these, but I want it to meet all of them, especially in a bear market, right? If we're focusing on, AAA, A quality, A plus setups, they should have all of these. So if it has, 4 of these, but the float is like 100 million shares, well, it's probably going to be a deal breaker. If it has everything, but it has no news, it's going to be hard to trust. I might still take a couple trades on it, but it's going to be hard to trust. And, I probably shouldn't trade it at all. Okay, so if it's got all of this, but the price is $50 a share, it's going to be too risky. So it's got to have everything. In a bull market, you might see a stock that has everything, and you might see 5 of them a day. In a bear market, you might see 5 of them a week. So the opportunities are still there, but they're a little fewer and further between. All right, so let's go ahead and jump into the class. Have I lost you guys? Are you guys still with me? Does it sound good?
I'm with you, gang. With you.
All right. This is where some of you guys are right now. You're like, oh my God. Done. I'm out. I know it's a lot. Listen, I know it's a lot. I know this is some heavy stuff. No pain, no gain, right? Okay. All right, let's keep going.
A good question is, how do I get started?
He would hit me with the ad.
A better question is, how do I profit today? Well, I can tell you, it's not by
W scan.
watching YouTube tutorials.
Okay, so all right, so I'm gonna back this out here.
kidding, I
I'm
don't
gonna
know.
put this up here. So I'll bring this back. I'll show this to you in a few minutes. All right, so now let's go over. So let's go full screen on
Bull
Bull
flag.
Flag. So
This is my bread and butter, bro. This is what I try a lot, and I'm telling you guys, this one's pretty good. It works really good in the a bullish market, but in the bear market, I'm gonna keep it a stat. It's not like that, bro. This shit.
So what I want to do here is I'm going to kind of play this out for you. So this is a bull flag pattern. So for those of you guys that are, you know, again, like beginning of the learning curve, which was kind of a good number of you, we're using candlestick charts. All right. So the reason we're using candlestick charts is because a candlestick communicates 4 pieces of information: the open, the close, the high, and the low. So really super quick, candlestick 101. This is a candlestick right here, and we.
Nah, bro. Eating in the cafeteria, watching my favorite trader. Man, thank you so much. I'm just trying to make it big one day. Alright, bro. Let's keep watching.
Got the open.
Appreciate the
close.
comment, bro.
So that's the
I'm
low.
about to tear up right now.
That's the low, and that's the high. All right. Now, if it was a red candle, it opens at the top and closes at the bottom. Those are flipped, but these are still the high and the low. So we like candlesticks because they communicate market sentiment. Doesn't it make sense that a candle that looks like this communicates something different than a candle that looks like this?
Oh, hell. That look
Clearly,
mad.
those are sending a message. So this is pattern recognition, and this is what we can begin to do: is we recognize these patterns. And so, in the context of a bull flag, what we have is a stock that has quickly moved higher. So these are our candlesticks moving up. Okay. Now, it starts to develop a pullback. Like this.
Excuse me.
And this is the important
God
place
damn.
to start watching. We will find a stock doing this right here as it's going up on our scanners.
Yeah.
The scanners are the radar that we use. So each one of these dots is the stock hitting the scanner. So we're going to pull up the stock. We're going to see, okay, this stock is moving higher right now. It's on our scanners. But I don't want to chase it. I got to wait for a pullback. So this is the bull flag pullback right here. So we wait for a momentary pullback. Now, the interesting thing is this could be on a 10-second chart. This could be on a 1-minute chart. It could be on a 5-minute chart. You could trade on a 15-minute chart. You could even trade it on a daily chart if you wanted to. The pattern occurs in all time frames. So it's up to you which pattern or which time frame you prefer to trade on. I am primarily using 1-minute and 5-minute, but I am also applying this to a 10-second chart.
God.
So
damn.
we've got our micro pullback. And during this time where it's pulling back, I'm going to be watching it closely. And my hand is going to be on what button? The buy button. So I'm ready to tap that buy button the second I see a candle break that price right there, that dotted line. The second this stock breaks over this level. And so what I'm going to have to be doing is I'm going to have to use my charts to be constantly checking what was the high of this candle? What was the high of this candle right here? What's the high of this candle here? Now, if this candle high is $3.10, then on my level 2 window, when I see 307 by 308, and then I'm seeing green prints at 308, I'm going to start thinking to myself, there's a good chance this is going to break through 310. I'm going to punch it. I'm going to hit the buy button. I'm going to step up to the plate on this. You have enough people that step up to the plate, enough people that press that buy button, and that becomes a self-fulfilling prophecy. And that's the reason chart patterns work so well on stocks that have high relative volume. It's because so many traders use them. Okay, and Dan, I don't exclude the wicks. I include the wicks. So I do include the wick. Now the first candle to make a new high, I'm long there, let's say 310. And of course the first target is a move back to the high. We break through the high right there. We continue higher. And then we wait for the next pullback. And then we do it again. And that's what I do on the bull flag, and I do it all day long. Now, I'm going to be most aggressive, and these are the waves that stocks are trading. This seems simple, and this is fairly simple. Where do people make the mistake? They try to apply that pattern to the wrong type of stock. It works well when you trade the right type of stock. When you trade stocks that have high relative volume, you've got a lot of people watching this pullback. A lot of people watching means a lot of people pressing the buy button as it starts to dip back down. If you start to apply this to a stock that has a high level of high frequency trading, like Bank of America or something like that, you are not going to see good resolution out of this pattern. It will not resolve correctly. There's no reason for it to resolve correctly. You have to trade the right type of stock. That's got to be first and foremost. Right type of stock to trade. And then you apply these patterns to that setup. All right, so let's jump back onto the screen here. So you can do this this could be a 1 minute. So like my example here on the whiteboard, this could be a 10-second chart. And remember, if this was a 10-second chart, then the 1 minute chart probably looks like this. It might have a small topping tail, which was formed right there. The next candle on the 1 minute opens a little bit lower, and then it goes higher. And then there's another slight topping tail as it opens a little bit lower and then goes higher again. Okay, now we look for the same pattern except for on the 1 minute chart, right? So this is the zoomed in 10-second chart. Now we do the same thing on the 1 minute. And then we could do the same thing on the 5 minute. And Raj says, what's my risk? Stop at the low of the pullback. Stop at the low of the pullback. Stop at the low of the pullback. So when I'm trying to buy a dip, I'm trying to buy it down here off this level, but I don't want to just start buying it, like right here, because I don't know, it might pull back more. And I don't want to buy it right here because it might end up pulling back more. In fact, it might end up pulling back all the way down and the chart's broken. Okay, so what I really want to do is I want to wait to press the buy button until I start seeing the green prints. When I start seeing those green prints on the level 2, that's usually what I'm going to look for, is that first indicator that the trend is starting to shift.
Hyundai Palisade versus Jeep Grand Cherokee. Look what Palisade has and what Grand Cherokee doesn't.
So this is the bull flag pattern, and I'm gonna read this to you so you don't have to try to read it yourself. I'll just I'll put up my camera so it's a little bit more interesting. All right, so the first candle to make a new high, the apex point of the bull flag or the pattern, that's the entry. Okay, so right here, this is the apex right there. It's the first candle to make a new high. That's the entry. Sometimes I will enter early to anticipate the breakout. As I said here, if the first entry, if the candle's at 310, but I'm seeing green prints at 308 and 39, that's an indicator. Go ahead and press the buy button. This is time and sales, and this is level 2. All right, so this is, again, a little bit more intricate, but important stuff to know. And if you're an active trader, you've probably already seen all this. So if I'm entering early, what typically triggers that entry is a break through a psychological level. Perhaps we dipped below on this candle. We might have dipped down to 299 or 298, and then we popped back up over 3. So breaking below and then back above psychological levels, very important. So even if a stock is not quite yet at the first candle to make a new high, it breaks below this critical level. So we're pulling back here, pulling back, and let's say this is $3. So we dip below 3, and then as it comes back up, there'll be green on the tape. So as it comes back up there, 299, 301, if it can reclaim the whole dollar psychological level, I'm going to punch that buy button at 301. 301, buy. And then the first candle to make a new high is still at 310. What am I going to do? I'm going to add more at 310. So now we've got this candle going up, going back up, going back up. And of course, the idea was on a bull flag, right? So this is a psychological level. And again, just by the way, this
I think it
is
goes over.
why it's so valuable to be trading in a community, because you're not trading on your own. While I'm trading, I am articulating this type of price action in real time. That's why you call me coach, right? You say, hey, coach, look. And I say, that's right. We're watching this stock. And that's right. My name's Coach. Don't forget it. So almost immediately upon entry, I want to see the price move up. If the price moves down immediately, my timing's wrong. Usually I'm pretty good with my timing because I'm tape reading, but sometimes the timing will be wrong. And if the timing's wrong, I usually cut it right away. So if I take a starter, then I add as it moves higher. Again, when I go red on trade almost immediately, I often change my perspective to getting out break even, if possible, rather than it being a win. I no longer kind of think, oh, this is going to work. Because if I get in and it immediately flushes, my timing is just wrong. Okay, so now let's talk about the target. So first we've got the entry. The entry is the first candle to make a new high, right? But we sometimes will anticipate it with an early entry based on the tape and psychological levels that we're trading around. And some of this is stuff that an algo can't really do yet. Maybe eventually.
I don't know, it's so laggy.
But this is where we have an edge as retail traders, right? We're able to read these nuances, both in the speed of orders going through, the levels, candles. This is a lot of stuff to try to program into an algo. And what we find is that stocks that have very high levels of relative volume are up more than 20, 30%. There's a lot of algos that when a stock is up that much, they just turn it off. And so there's this argument that high frequency trading algorithms are providing liquidity to the market. Yeah, until the market gets volatile and then they turn off. So when they turn off, volatile market gets even more volatile because you don't have those algos creating the bids and offers that kind of tighten it back down. But that's actually good for us because that's where we start to see these big moves. As day traders, we profit in a way from inefficiencies in the market. If the market was perfectly efficient, a stock would just always be trading at the exact correct value price, and you wouldn't have these fluctuations. You wouldn't have these news spike. It would just, there'd be news and then immediately it would be at the next level. But it moves to these levels and then comes down off of it. So anyway, so the target is a retest of high day. All right. Now, if the pullback is a bigger one, then we may start getting into the mindset of an ABCD pattern. And we're going to talk about the ABCD pattern again in a second, but the ABCD pattern would be like it pops up here, and then it dips down again, and then it starts to go. So it's like a double bull flag. And in a way, it can make this final breakout more powerful, because during this sort of period of consolidation, more traders, and these are their eyes, they're like looking at it, they're like, ooh, this is exciting. And this, he's kind of this like his face and stuff. He's like, ooh, this is interesting. And then he's like pressing the buy button. When you have really fast patterns, not as many traders will always see them. And then that's going to reduce the volume. So when you have a pattern that's very obvious and is more drawn out here, more eyes mean usually better follow. Again, not always, but that's typically. So risk factors. So here's the thing. Stops are usually tight on this pattern. However, we do have a risk factor of false breakouts and double top rejections. So a double top rejection is when you come up to this level and then you reject off of it and just kind of like it sells really hard.
Yeah.
Now, a number of things can trigger that, but initially, usually what it is, it starts with like a big sell order. So it comes up to this level and all of a sudden someone puts out a big sell. And so it immediately kind of flashes down in that market order. And then
so yeah, basically what he's trying to say, man, is we saw that today. So you see how it comes up to this level? Say the level's like $5 or whatever, and it comes back up. You usually see like it goes up and then it wicks and then goes straight down. We saw that today. I think we saw that today, right? We usually see that a lot, especially in the bear market. That happens a lot. We see that a ton of times. See from a stock moving up, pulls back, come back to that previous high, and then it starts flushing off crazy. That's called a double top. you know, it's just, you know, unfortunate, right? But it's usually more common in bear market.
People that got in for this might
I'm gonna start watching around 1 o'clock. 1. So tomorrow we'll finish it for sure. The video.
go pullback or 1 minute pullback, start
After
to bail,
an
and then you
hour.
get that panic sell. And if it breaks through the low of this last pullback, it's stopping people out, and now it's breaking. It may still end up working on a 5-minute or a 15-minute time frame, but whether or not you really want to hold it that long is sort of the question. So this is something that a lot of traders in this place, if you see that double top and it doesn't break through it, they're going to bail out. So that means buying at the very high can be a little bit risky, especially in a bear market. Buying on the pullback is going to be better. And so that's probably the biggest risk, is a false breakout, either formed by the double top or just through it popping and then immediately reversing back down. But the stop loss is typically tight at the low of the last pullback. Now, this is all relative. If this is a $3 stock, this might only be a 15-cent stop. If it's a $30 stock, it could be $1.50 per share stop. But as you know, we would rather trade lower price stocks because it's easier to manage risk on, and usually we'll see more momentum on them anyways. So that's kind of my preference. Profit targets on this, I mean, generally speaking, 1-to-1 is minimum. I aim for 2-to-1. So if I'm going to risk 10 cents, I want to have the potential to make 20. The potential, the realistic potential. So if I'm looking at this setup and I'm thinking about getting in, the difference from this entry here to the high has to be at least 20 cents. That's a 10-cent stop, that's a 20-cent target. If that's not a bare minimum, I probably won't take the trade because I'll just say it's not worth it. You know, maybe it's a B quality setup. Maybe in a hot market, I would take a B quality setup, but in a cold market, in a bear market, no. I'm going to be focused on high quality setups, which means during a bear market, I'm going to trade less frequently. But the trades that we have, I'll still be aggressive on them. And when they work, I'll do well. And so that's the biggest difference, is fewer trades, more disciplined during the bear market. Below the last pullback. Now, this is all relative. If this
Okay, that what he just said was so important, and I feel like it just runs down what you were just saying. We're gonna put this in the next one because this actually not a lot that.
it's a $3 stock, this might only be a 15-cent stop. If it's a $30 stock, it could be $1.50 per share stop. But as you know, we would rather trade lower price stocks because it's easier to manage risk on, and usually we'll see more momentum on them anyways. So that's kind of my preference. Profit targets on this, I mean, generally speaking, 1-to-1 is minimum. I aim for 2-to-1. So if I'm going to risk 10 cents, I want to have the potential to make 20. The potential, the realistic potential. So if I'm looking at this setup and I'm thinking about getting in, the difference from this entry here to the high has to be at least 20 cents. That's a 10-cent stop, that's a 20-cent target. If that's not a bare minimum, I probably won't take the trade because I'll just say it's not worth it. You know, maybe it's a B quality setup. Maybe in a hot market, I would take a B quality setup, but in a cold market, in a bear market, no. I'm going to be focused on high quality setups, which means during a bear market, I'm going to trade less frequently. Quality setups, which means during a cold market, in a bear market, maybe in a hot market, I would take a B quality. You know, maybe it's a B quality setup. Maybe in a hot market, I would take a B quality setup, but in a cold market, in a bear market, no. I'm going to be focused on high. Quality setups, which means
I'm sure I wrote that down. Let's me. Come on.
during a bear market.
Okay. Let's see. Not too close. Okay. Which? Oh my god, my handwriting is kind of dog shit. What the fuck? Okay. Which means during the bear market, a bear market. Okay.
I'm gonna trade less frequently.
Going to trade less frequently.
But the trades that we have,
What? The trade. Oh my gosh. Yeah.
I'll still be aggressive on.
Will still be aggressive. Also on them.
And when they work, I'll do well. And so that's the biggest difference, is fewer trades, more disciplined during the bear market. And also, in a strong market, I would be adding into these numbers. I'd be adding up here. Oops, I'm adding up here. I would add up here. And I'll just add at highs. When I'm seeing green on the tape, I'll just keep adding into that squeeze. So I'm just like, I'm all in. In a bear market, I'm gonna buy on the first entry here. I might, take a starter on this dip and then add into this breakout. But I'm not gonna be as aggressive adding too high into the breakout.
Mm-hmm. I think that's very important. We'll keep it at 1. Keep it right here. So when we come back, you have more to learn. This is important. So basically what I'm getting off this from watching this whole video pretty much is saying you just really pretty much just trade less and just be patient for opportunities that are going to come. Because that's true, man. We have one opportunity on Monday and we thought we had another opportunity today with the Holtz going up. And I think that's what I'm going to look for. I'm looking for Holtz because that shows a lot of volatility and a lot of opportunity for us traders. And that's when I feel more comfortable trading. Trading these stocks that are the bull flag in these type of fucking markets right now is fucking like, it's pretty shit. I'm gonna keep it aside, but it's pretty bad. Like, it's not good. You're trading basically, bad setups. Like, it's not good. It's very, very unsafe to trade these kind of setups. I tell you, this setup is a very good setup. I guess he calls it a B setup, which is honestly pretty good setup, honestly. But I don't know, man. I don't know what to tell you guys. I'm just be honest, bro. I think the only thing that I saw success on a lot right now is trading holds, and not every single hold is gonna be good. We saw from today that some holds they move up, but they just don't give us opportunity where it pulls back, and that's where we find a lot of opportunity. That's where we find a lot, And I think that's something that we want to look for a hold, and we want to see if it rejects a little bit back and then pulls back higher, and then we go to higher highs, and that's what I'm looking for. But yeah, man. Other than that, that's pretty much. I'm done with this study session. We traded a little bit in the morning, man. We're only getting more information, more and more. And yeah, then we're gonna trade again tomorrow. Tomorrow is Thursday, I believe so. Yeah, tomorrow's gonna be Thursday, the second week. And yeah, man, I'll see you guys tomorrow for another trading day.